Good morning, everybody, and welcome to this CEO presentation at the Thule Group Annual General Meeting 2023. I'm Magnus Welander, CEO and President of the company, and I thought I would give you an update on what has been a very particular year in 2022. When we look at the year as a total, you can really say it was a year with two halves. We had a strong start with a growth even compared to a very strong 2021. And then we saw a clear slowdown in everything that was bike related, with bike retailers having been too ambitious and too optimistic during the spring, and thereby sitting on general and also on Thule specific products on too much inventory. So in the second half of the year, we saw a rapid and clear slowdown in everything bike related. Compared to a very strong previous year period in 2021, that meant we had a minus 26% decline then in the second half of the year. So it's easy to remember only the last thing, but you can take a step back and say it was still the second best year in the history of the company. We had a revenue of 10.1 billion SEK, and we had an EBIT of 1.7 billion SEK. Clearly a strong performance despite the weaker second half of the year. We also generated about 500 million SEK in cash, and in today's annual general meeting there is a proposal for a strong dividend payout as well. When you look at what we therefore have, I can say we're very happy with what the total was, but of course would have liked a better ending of the year. What I'm also very proud of is our continuous strong work on sustainability measures. As a company with more than 80 years history, we've always been very focused on building products that you can use for a very long time. That's our core commitment to sustainability. Products that can be used for a long time is the best way we can do things for the environment. But of course, we also need to look at which materials we use, what type of recycled content, what choices we do in our design and how we set up our factories. So I'm very proud of the improvements we did in 2022, both in terms of total emissions as well as emissions per revenue, which both clearly showed a good decline. I'm also very proud of the commitment of the company that was announced in 2022, that we are now also committed to net zero initiative by 2050, which combined with our science-based targets, 2030 targets, means we have a very clear agenda in front of us with very ambitious environmental sustainability efforts. On all other terms of sustainability, caring about nature is not the only thing. We care about the society and we care about our employees. And please go into our homepage and read more about that or in the annual report. Clearly then, when you look at the business, you can see that we had two regions and we have also 4 different product categories. In 2022, it was actually the categories performance that mostly shaped because they were more similar across the markets. And the category that we have the most sales in and which is defined Thule for a very long history is what we call Sport&Cargo Carriers. So all those products where you bring your gear on the car to go and live that active lifestyle. In that category we saw, which is about 62% of sales of the Thule Group in 2022, we saw a decline of 17% in constant currency. So of course that would make you stop and say that was a bad performance. But we also have to remember that as we spoke about in 2021, we had a very strong pandemic boost period with people staying at home and doing a lot of activities. And therefore we also need to look a little bit more long term, and if you take a step back and instead of just comparing 21, actually compare to the year before the pandemic, 2019, we actually have an 11% CAGR in this category, so a strong performance over time. Within the category there were very big differences between subcategories. And the biggest difference was that the bike carrier category, which is the biggest part of Sport&Cargo Carriers, had a very weak second half, extremely weak, as we saw in the year, dramatic slowdowns from retailers that at that time we're sitting with too much inventory in general of bike products, but also specifically of the bike products we sell, the bike carriers. If you look at the other subsets inside the Sport&Cargo Carriers, they actually showed nice and solid growth. But of course, having been so strong in growth in bike-related products in 2021, that meant a tough year when we looked at it. In 23, we're also getting exposed, especially in the first quarter and in the beginning of the second quarter, of still very strong bike-related sales. And at the same time, these bike retailers around the world still have a lot of inventory on hand. So clearly that will impact a slower start in 23 also for this category. We have a lot of exciting new launches, and I'm going to show you some of those later on. But generally, we feel very confident in our market position and that we haven't lost any market share. It's been a reality of a tougher market versus an extremely strong comp from 21. If we look at the second biggest category, RV products. So these are the accessories that sit on the motorhomes, on the vans, for those people that want to travel and have that lifestyle of traveling around and being able to go on a vacation in their own mind. And when they go to those places, they want to also be able to enjoy the space that you can create outside the vehicle and bring the gear that you bring on the vehicle. That's where we provide a very strong product portfolio, which is mostly dominated in sales in the European region, with more than 95% of our sales in this category happening in Europe. Here we had once again another strong year. We grew with 17% in currency adjusted growth numbers. And also if you look over the last 3 years, then in a compounded annual growth rate, this is the strongest category with 19% growth over a compounded annual growth rates since 2019. So a strong performance with a fantastic portfolio product, a better than competition in terms of serving a category. But the category in itself had some challenges because it is built on motorhomes, and motorhomes were difficult to get out of the supply chain in 2022. The big manufacturers of motorhomes in the European market struggled to meet the pent-up demand that had been created, with a lot of consumers wanting to pursue that active holidaying with a smaller motorhome or van, and their order books were very long. We will now see in 2023 a filling out of some of those orders, and the biggest challenge we see in terms of the market in 2023 for this category is of course the questions that will come once that big backlog has been met, how consumers in a tougher financing situation and with some inflationary pressure will look at acquiring motorhomes in the coming periods. But the first part of the year will definitely be very strong because there is already a good backlog of orders. If you look at our third category, nowadays called juvenile and pet, used to be called active with kids. So this is a little bit of a precursor to the fact that we will be launching dog-related products in 2023, later on in the autumn. But still at this time, it is mostly for children then. And it's for bringing your kids with you in your active lifestyle. We're number one in the world in terms of bike-related travel with your children. We have a fantastic assortment of bike trailers. We also have a fantastic assortment of bike seats. And normally that would be brilliant, but then once again in comparable numbers after a fantastic growth in 2021, we actually saw a decline in this juvenile and pet category in 2022 in currency adjusted numbers, a decline of 17%. But once again, also here, if you look at a compounded annual growth rate, we've had a strong performance over the last 3 years. So you should be looking at it from a realistic point of view that there was a very big peak demand and a little bit of stock filling in the bike-related sectors. And then in 22, there's been this adjustment from bike retail in the second half of the year. And that will also continue like in Sport&Cargo Carriers for the bike carriers, also here during the first few months in 2023. We also grow in strollers, which is a strong category potential for us, where we had a good performance in all markets except the US actually, where we needed to take some decisions and change a little bit our setup. But overall, we look positive to this category going forward, although having those bike-related challenging situations from a retail stock level perspective in the first few months of the year. And then finally, the packs, bags and luggage category. The packs, bags and luggage category is the one that grew the most. We grew 21%. But we have to be honest, it's the other way around here. We had some easy comps because we all know that during the years of the pandemic in 20 and 21, there was a very limited international traveling. And there was also a lot of people working from home. And when you worked from home, you weren't as keen to bring your new laptop bag or your duffel bag with some jogging gear and some other things to work, and your laptop and some other things, so you didn't buy new bags in the same type of levels as there was in the past. So although strong versus 21, that was also because 21 was a relatively weak year. In fact, out of all the categories, this is the category we have had the lowest compounded annual growth rate, with only 3% since the pandemic. And there's a good reason for that. A few years ago, we announced that we would be stepping out of some low margin legacy type of categories with sleeves for computers, camera bags, etc., that aren't the type of categories we will be in the long term. We are in some of these categories a little bit of a last man standing. We're not spending development money, we're not pushing, but we still keep on selling. But it is rapidly declining, therefore continuing to draw down our sales in this category. And the strong categories are then instead the everyday backpack where you bring your gear to work or to university, or as we see now again with travel picking up again, the luggage, the duffel bag, the carry-on bag to grow for the future. We feel very strong about some of our new collections with 100% recycled materials, with fantastic feature sets, and with a design that speaks to the modern consumer. So we are confident in a strong 2023, once again in this category, looking forward to seeing a pickup as people more and more travel again. So when we look at those categories and the performance and think about what goes on in 2023, you will see a challenging start for the year, as we've said, due to bike retailers having so much inventory on hand and also comparing to a very strong comp period. We will see the second half being the absolute opposite. We had an extreme slowdown in the bike-related categories where we expect that that will change in the second half of 23, so we have much easier comps. The biggest question I think most investors are putting in when it comes to how Thule will do in 2023 is more associated to when will the bike inventory in retail sector start to normalize. And we believe it's going to be sometime in the midst of Q2. So in May-ish time, we will start to see a normalization more and more coming in, which means a weaker Q1, a weaker Q2, and then strong Q3 and Q4. If you look at the rest of what we're doing as a company and what our focus is, therefore is we need to be extremely flexible. During the last few years, we have really proven the model of our supply chain. Our supply chain was built up over decades to be a seasonally ramping up and seasonally ramping down. About 80% of the products we sell are assembled in our own plants. So when you then have a very seasonal product, you need to be very good at ramping up and ramping down the production. We saw the advantages of our model during the pandemic, when retailers wanted to order nothing in the 2020 period when the pandemic hit. We needed, like everybody else, to pull back. But what then happened when retailers started to place orders again later on in the summer of 2020 and in the autumn, those companies that had everything done by suppliers in Asia struggled to meet the demand. And we were quicker than our competitors and were therefore grabbing market shares throughout 21 as a player that could, with its local sourcing and local own assembly plants in Europe and in North America, we could meet that demand peak that happened during the pandemic when it was boosted. So we've been very good at that. And if we've been good at that, of course, we needed to show that we could also handle the slowdown. The slowdown that came in 2022 in the summer for the bike-related category actually caught us by surprise. And in fact, we did a profit warning in September 2022 due to the fact that it was so strong, that slowdown, and that we would see it coming for so many months ahead that we needed to announce that to the market. But we had acted already on our setup in our plans, and we had used our flexibility with a 3-tier approach where we have fixed employees as the base in our assembly plant. We then take in normally seasonal employees and have another layer, and they stay on for anything from 4 to 6 months. And then we top up with quite a lot of temporary staff that come from agencies. That's the setup we normally do to handle seasonality. In 21, we had a fantastic growth versus the past, adding almost 3 billion in sales in less than 18 months. And that meant that we kept all those staff the whole time to catch up. We also had a higher than average CapEx during these years to build up flexibility and more automized assembly for the future. As we were starting to catch up with that and then saw a very rapid slowdown in demand of the bike-related products, we faced a situation with too much staff on hand and a clear under-absorption of our fixed costs in production. That hurt us during the second half of the year and also impacts us today as we are in the beginning of the year. In fact, if you look at the end of Q1, we were 900 people fewer in our plants than we were at the same time last year. Thankfully, the vast majority of that was seasonal and agency workers, so we've been able to hold on to the vast majority of our fixed employee base. We have also been very strong in compensating as far as possible and will for every month continue to get better at compensating that under-absorption in our factories. Because the reality is we also built up our own stock. Not only did some of the retailers, the bike ones specifically, sit with too much on stock, we had too much on stock in 2022. We are therefore starting to draw down that stock now in 23 and will continue to do so throughout 23. Which means for our production plants, not only are we seeing a slow start in terms of sell-out because of the retail inventory levels, also a fact that we have so much on stock that we will not want to have at the end of the season, so production levels are low. What is holding up our profitability and making us convinced that we will still be a very profitable company also in 2023 is the fact that we clearly made those necessary price adjustments as companies needed to do when costs increased. So with all of that going on, we're very confident in our long-term gross margin and therefore our long-term profit levels. So what we're also doing, and that was a very key decision supported also by the board, was we kept on holding the gas pedal down to the bottom in terms of product development efforts. This is a company where product has also driven always our growth, and we were convinced that we needed to come with all of those new products, both in existing categories and then also entering into completely new product categories for the Thule Group for the coming years. So we spent 6% of sales on product development, more money than ever. And of course, that means we have a very exciting 2023 ahead of us. We've already, here, even if we're only into April, launched a number of new products to the market. And there's some more coming to the market this year. And also a very strong assortment of product that we show to trade at trade introductions during the summer that will hit the stores in the beginning of 24. In fact, by far the strongest alignment of new products in a 12 to 18 month period that we've ever had. So with a well-invested plans, etc., we feel very good about the long term of the company. As I now look at the situation, we are facing, as I said, tough comps the first half, much easier comps the second half, and a fantastic, strong culture in the company of going forward. It is now, as was announced during the quarter, time for me to do my last AGM. So this is the last time I'm presenting as a CEO at this type of context for the Thule Group. Because in August, Mattias Ankarberg, currently board member of the Thule Group, will take over as a CEO. So therefore, allow me, not just to talk about the year, because when you've been in a company for 17 years, it's always good to take a step back and look a little bit both at history and what is to come. Because you all know, to know where you're going, you need to know where you came from. This is a company that has been around since 1942, doing a fantastic job for a very long time, long before I joined the company. I've had the super fun opportunity to work with this company now for 17 years and being a CEO since 2010. So that means a long time, my by far longest time working time. And when I look at that and look at where we stand and what we've done, let's look at some of the key things. So they're always easier to sail with the wind and than against it. And although we have a temporary headwind and a tough one with bike retailers sitting with too much inventory, that is, I am 100% convinced, a temporary inventory adjustment. In reality, biking is a fantastic strong trend, and the bike as a micro-mobility tool will continue to grow. There's been more investments than ever in bike infrastructure, both in terms of commuting in cities, but also in terms of recreational fun in mountain bike parks, etc. So bike, which is strong, will continue to grow once again after these inventory adjustments. Also, it is clear that the smaller cars and the trend to go that will trigger more need of transport outside and on the cars in different ways. It fits a company that provides those type of products. The active staycationing trend to do that lifestyle of having fun with friends and family, yes, it was clearly helped by the pandemic because a few people that maybe normally would have flown to Ibiza or flown to Cancun needed to stay at home. But what I'm sure all of you will agree that when you talk to friends and family, there were many that were positively surprised. And it's also in a logical way connected to sustainability. The ability to have fun and close by and not always fly away will be there also in the future. Then, as a nowadays 57-year-old person, there's a lot of jokes the last few years that I'm in the 55 plus category now in terms of our product assortment. And I've said many times before that the reality is there is a much more active consumer base. The 55 plus generation of today is doing many more activities than they were doing some 10, 15 years ago. And then finally, in terms of what the trends that are helping a company like Thule is, the strong lifestyle brands with a true sustainability positioning will be winners in the future. There is no doubt about that. So 5 strong macro trends that truly help us for the future. What is also key and what is very important is you can only get those effects if you invest for the future. And I'm so proud of what we've been able to do over the last decade. We have invested more money than ever and smarter than ever in our fantastic ability to design, develop and manufacture great products that the consumers want to buy. So that whole effort is you have great people that know what they do. You are brilliant in taking in those consumer insights, but no matter how brilliant you are, you also need to put the money behind it. So during the pandemic years, we invested 180 million Swedish krona in a fantastic new development center with state-of-the-art facilities and a state-of-the-art test facility with crash test and many other test methodologies to be deployed. That allows our brilliant teams to put together and come up with fantastic new products. That spend, which was around 6% per year the years before the pandemic, dipped down a little bit because in 2020 with everything going on, clearly some of the projects slowed down. And then with the fantastic top line growth in 21, we saw a dip in percentage of sales. We were back to the 6% level in 2022, and I am sure that the management in place will continue to put efforts behind great products also in the future. And when you look at great products, it's always the most cool thing when they finally hit the market. So just a few weeks ago, we started selling Thule Epos. Thule Epos is the most innovative bike carrier we've ever launched. It fits virtually any bike. It's easier to load and unload than ever before. It's tiltable, foldable. It is the best bike carrier on the tow bar and on the hitch you can find in the marketplace. And one other good thing, to be honest, nobody has it on stock, so this bike carrier they do need to buy already early in the spring. But not only Thule Epos, we also have done some other smart cargo solutions that hit the right spot at this time. You know the growth of e-cars and electrical cars. There is a famous range anxiety. How long can I get there? Especially if you're driving maybe to a little bit of an off location. You're worried about your charging. And clearly, no matter how well you design a roof box that sits on the top of your car, it does increase battery consumption. Or petrol consumption if you have a petrol car, by the way. But what we've done is we've launched a product called the Thule Arcos, which is a tow bar and hitch mounted box for cargo that sits on the back of the vehicle. And what is fantastic with that product, aside from being very nicely designed and very practical to load on, is that it is virtually not taking any extra effort from a battery consumption to bring. In fact, on certain car models, it has been proven also by external test institutes and external car-related media, it actually reduces the battery consumption versus if I wouldn't have had it on when I traveled with my luggage. So a fantastic new exciting launch of the Thule Arcos, and we will be complementing with other solutions in terms of cargo at the back of the car. What has also hit the market, and what is a very cool product for those that are true adventurers out there, is our Thule CapRock roof platform, where you can put a lot of gear or a rooftop tent or a kayak carrier, whatever, truly for those true adventurous people that want to travel with lots of stuff. And as I said, the Thule CapRock is a brilliant platform to put the Thule Approach on. The Thule Approach is the market's best rooftop tent with most spacious. You get the best views. It's the easiest to deploy. So a strengthening of our offer for those that want to live that active lifestyle and be staying in the outdoors. There are many other cool products coming and many new exciting trade introductions coming as well. So these are just some of the cool things. So make sure you go into thule.com and look at them. Because there's another good reason to go into Thule.com. Our biggest consumer-facing marketing solution is clearly having been getting a fantastic refresh and facelift. So in March, we went live with a very updated Thule.com. That will both be a fantastic marketing tool and drive sales in general, but will also be a key tool in what is our fastest growing channel to market by far, our direct to consumer. Today we do that sales in direct to consumer in 11 markets, and in 3 of those, US, Canada and Sweden, it already starts to be more than 10% of our sales, and it is by far the fastest growing channel, which I'm convinced it will be in the future as well. And the reason it can be that is if you look at strong brands, consumers want to be associated with them, consumers want to be buying from them, and that's what we're doing with strengthening continuous the lifestyle brand of Thule. With an inspiring brand position, a genuine brand promise, and a real brand connection with both the ambassadors that we engage with and the consumers that buy our products. That creates a consistency of a true lifestyle brand that when you connect that with our efforts of serving also those customers in a great way by having a really good on time in full next day delivery service from our supply chain, we are capable of meeting those requirements in a cost efficient way. And as I mentioned, we have now done more investments than ever in the last few years in modernizing our plants. And they are state-of-the-art modernized plants where we, on the high volume runners, are automating more and more. And then on some lower volume runners, we have a more combined manual and automatic assembly. It enables a high quality, it enables a greater flexibility, and of course, a greater opportunity to capture economies of scale. I feel very good about our entire supply chain setup, and we're back to very high on time in full performance, which did dip a little bit during 20 and 21 with all the challenges we saw with the supply chain. You all know that materials are expensive, but luckily at least freights are starting to come in the right direction. So therefore, in terms of pricing, we didn't push through price increases aside from a few of our products in 23. But we will see during 23 some of the benefit of those price increases that were implemented mid-year 2022. So overall, an efficient back end in the supply chain. Then doing that in these times is also very much focused on building that brand and building this company as a truly sustainable company. And of course, environment comes first and foremost. It's, I think, everybody top of mind, but it's in all aspects of what we do as a sustainable company. And from an environmental perspective, the commitment to the science-based targets, the commitment to the net zero 2050 goal is of course what drives us, but there is this true passion on all the new things we bring to market and all the ways we produce them to truly be that sustainable company. So looking then at the long-term reality and what's been going on, and reminiscing a bit as I now hand over to Matthias, who will take over in August. I've heard a few comments, are you handing over the baton for the relay race? I actually see it more, maybe it's because I'm an old sports person with a ball involved. It's more like rugby. In rugby, the person with the ball is running at high speed, and before they leave over the ball, there is somebody else about to overtake them. You pass the ball slightly backwards, and they come with full speed and go ahead. That's what we're doing now in the handover to Matthias. I am convinced that the team that we have in place are fantastic employees who, by the way, I want to thank you all. It has been 17 fantastic years. I've enjoyed my time here, and it's all thanks to you brilliant colleagues. So a great thanks to you. I know you will do the same brilliant work for Matthias and together with Matthias. So what we will see is clearly, I am convinced, strong value creation also going forward. And always, when you reminisce a bit, you saw the image maybe behind me. I can tell you the short story is this. I got a whisper in the ear from the responsible at Nasdaq Stockholm when we did the IPO in November 24. There is a urban legend that the higher the bell is rung by that new company to be listed, the better the stock will develop. Being a competitive guy, I pulled off the rope when I rang the bell, which was maybe not what was supposed to be done, but actually probably it worked partly, because what is clear is that we have outperformed since we stock listed in 2014 the general OMX index with about 228% as of yesterday. And also what I'm very happy to say is that we have given back in dividends roughly the same amount, 7 billion Swedish krona, as our entire market cap was when we were launched. So all the colleagues have done a fantastic job to bring the company to this point. I'm also convinced that all those colleagues, together with Matthias, will do an equally fantastic job when it comes to hitting those targets for 2030 that were presented last year. Matthias, who was on the board at that time, is equally committed to these targets, and they are to reach 20 billion SEK by 2030, to have an EBIT margin above 20%, to do at least 75% of annual net income in dividend, and to meet those ambitious sustainability targets that were set for both 2030 in the science-based targets and the net zero commitment targets going forward. So with that, I thank you all for having listened, and I want to pass on, as I said, once again, a huge thanks to all my colleagues that have made my life easy and brilliantly fun. And I truly wish you, Matthias, as you take over, the same 17 fantastic years as I've had with the company. So thank you for listening, and keep on buying Thule products.